This is an update on Litecoin, which along with the rest of the crypto space has had pretty spectacular rally, and it's finally giving us the look that we would expect to see if we are done with this big crash that we've been in seemingly forever, since about November. This is my 30-minute view on Litecoin, and we had a BTFD opportunity. It looked like we had a 5-wave rally up about 3-4 weeks ago, and I've obviously changed the count a little bit, in which we looked at this top here as our actual third wave, and that dip was the fourth wave. And the reason for that is that we had our third wave up, fourth wave down, fifth wave up, and it was a slightly higher high than we had on February 25th. And we pulled back and invalidated this being a small nested subwave one. So for that reason, I'm recounting everything. So this is more aligned with the rest of the crypto space, in which this was the actual top, kind of a truncated fifth wave top, with this being a second wave. That was the low point that we hit on March 7th, and we have not revisited anywhere near that in quite a while. That was at about 96.27, and looked like we had a corrective bounce in ABC up, which is usually a bad sign, and it looked like we were about to start some much more downside action, and instead we've been melting up steadily for several weeks straight. This is closely mirroring what we're seeing in the equity space as well, with the S&P 500 and the Dow, in which we looked like we had a very good downside setup, and then we just started grinding right up. This is often what you see when a bottom is hit, in which it looks like we can't keep going. And well, you start feeling a bit of denial that the market's about to run away and you can't believe that it's going, but this is what we have so far. When we look at the fibs, if we take this as our 1-2, typically your C wave will land somewhere between the 1.0 and the 1.6 extension. So we've broken through the 1.0. That is our first test of what we're to see here. The reason this is significant is that this could be an A, a B, and a C wave. So that C wave, once you get past about the 1.618 extension at about 135.60, it becomes very unlikely that we're going to pull back again. It makes it more likely that's actually a third wave and an upward impulse, and we're going to have a fourth wave sideways consolidation, and finally get our fifth wave up. So that is what I would expect if we're looking at a standard impulsive pattern. The alternative is that this is actually a leading diagonal setup. So this is a 1, a 2. We already have our third wave top. It fell within the 1.0 to 1.236 region, where you expect the third wave of a diagonal to end up. You'd see a deep retrace, and then our final top would be somewhere between 135 and 139. We got our work cut out for us in Litecoin for that reason. Now, big picture, I've made some changes. We had our red pattern as primary up until relatively recently, and I was looking for a lower low into this blue box down here. However, we had that spike down, which is, again, whatever the low was, get the closer picture view here, 91.55. That is where this thick red line sits, and we have not broken down below that since. We had that lower low again on February 25th, and we've been rallying since. So far in the big picture, this does look more like an ABC, and well, we have 3 up so far. We need to see that consolidation, a fifth wave up, to make us more confident that we got the setup that we're looking for to put this crash behind us. And as I've been pointing out across all my other crypto videos, we are seeing this divergence here, in which we had lower lows for the prices, but we've been less stretched to the downside on the MACD, the MACD. So that is another classic sign of bottoming. And you can see how even when we stretch back to the mid-2021 crash, we didn't get anywhere near as oversold. So these are all signs that this really is just a C wave, and that we are done with this overall correction, whether this is a fourth wave or a second wave, which we'll touch on just a second. Now, our support, again, is at 91.55. I think I put 96.61, so it's really 91.55. I'm going to correct that right now before I forget, because we had that secondary spike down. So as long as we respect that low, and ideally we see a higher high, we are looking to target upwards. I know this is in red here. This actually would be part of the green pattern now. So I'm going to recolor that right now. Again, I don't want to forget. So we're going to touch on this in just a second. Historically, this is what we're looking at Litecoin. Not that long ago, I did reinterpret what I see this big structure as being. Initially, I was seeing this as being a larger degree wave 1, larger degree wave 2, and then potentially this would be a 1, 2, and then maybe a third, or the alternate would be that this is actually a truncated C wave for the larger second wave, and then this is actually a nested wave 1. So in other words, it would be a 1, 2, and, or I'm sorry, a 1-2 and a 1-2, which would be the most bullish setup. We have that in Stellar, Lumens, and EOS, and a handful of other cryptos. That is now my alternate view. My primary view aligns better with what we see in Bitcoin Cash and Ethereum Classic, in which we have, well, a leading diagonal. So that means that this is a 1-2, and this is a nested 1-2, and then this was the top of our third wave. That's what you see marked in red. Forgive me for the mixing of all the colors. That is our primary, and then we have more or less completed what I'm calling fourth wave. That's what I'm looking at this as. Whether we continue to rally up from here or we have a little lower to go, it would still make most sense as a fourth wave in a larger diagonal pattern. The difference with the diagonal is that you have these really deep retraces in which your fourth wave overlaps the top of your initial first wave peak. That breaks basically the second rule of Elliott wave theory impulses. So that's why it's not an impulse. However, you could make the argument that these subwaves are impulsive. So that's why I'm still keeping the original pattern in the back of my mind. It is an alternate. That's what you see in blue here. So that blue pattern tells us that this is actually the real first wave, and we're in a second wave. Ideally, we would have pulled back a little lower, but we did go more than low enough for this to be a second wave, and that we would have a third wave coming our way. How will we know which pattern is the right motive pattern? Well, we got to see where we go on the upside. So assuming that we start rallying right away, we expect our fifth wave top of this ending diagonal to end somewhere between 542 and 715. You often see a throw over in an ending diagonal or leading diagonal in this case. So you may see us exceed that target for the top. Briefly, you'd have a little green candle spike. That's where you have maximum optimism. You have that irrational exuberance before a crippling pullback would kill us later on, because that's what diagonals do. They precede a sharp reversal. However, if we continue to blow right through that resistance zone, so about 715 to 1116, if we get through that region and keep going, that is a very strong indication that we're actually in a much larger third wave, and that this is actually a first wave. So we're not going to know what's going on for a while. And for the short term and the intermediate term, it makes no difference. We're going to rally somewhere in this region first. So because I am identifying this as a diagonal, you'd expect there to be an ABC zigzag kind of a structure up. So you would have an A wave into this box, B wave down, and you'd have a final impulsive C wave that would take us into that region past $715, somewhere in there. Now, what are the exact proportions? I can make a kind of a quick back of the envelope calculation here. Let's say we get to about where the B wave top was approximately, and maybe we have a standard 38%. I'm going to split, let's call it a 50% retrace. Our final top would fall in that region. So that is what your structure will look like. Maybe we get that 200 to 350 rate region, somewhere around there, have a relatively sharp pullback, and then we finish off in a final C wave. So again, you'd expect a three-wave pattern to finish this off, because again, this would be a leading diagonal. However, if this starts looking more like a 1, 2, 3, 4, 5 wave impulsive pattern, and or we actually blast right through the top, this resistance zone right here, that's giving us the more optimistic picture, and that would be quite spectacular. And I think that if we are going to follow that blue pattern, you're going to see Litecoin outperform very soon. If not, again, nothing to be worried about, because we still have a lot of upside, even if we are following this primary diagonal pattern. So that is what we're looking for in the short term. If you are looking to buy, you could still do that. You could wait it out. You'll have another buy opportunity when we have this pullback in the B wave. And again, the key number is that 91.55 level. We are absolutely not out of the woods yet. I know we're all getting optimistic. The overall stock market, commodities markets, everything has turned. Cryptos are rallying, but we need to still push past those resistances overhead. And well, honestly, once we get through about 144, if we can blast through there, that makes it very unlikely we're going to turn back down into this blue box. So subscribe, that way we don't miss any of my updates. And if you enjoyed my video, please give me a like. And until next time, thank you for watching and happy trading.